I'm not going to talk about what I really want. I'm just going to talk about what I need for this business to grow. I mean, in the ideal world, no. But in my world, in the world I live in, we need clarity from regulators to move forward.
Wait, why in an ideal world, no?
Because in an ideal world, I think there would be other things to regulate, or you could show self-regulation, or you let your consumer decide what they feel is most comfortable. Maybe the consumer wants some levels of security, and you can show the consumer directly. Do I think that all regulators are checking the safety and security of a company at the same level they should? No. Do I work in some markets where I don't really trust the regulator to do their job appropriately? Definitely. So, not to sound like a libertarian, but I mean...
Okay, so ideally, no, but in the real world, you need it.
My customers ask me, we can only work with companies that have clarity from regulators. So I need clarity from regulators.
When are you going to get that?
I have it in many of my markets. I have it all across the UK and Europe. Now with this acquisition, I have it in Nigeria. I have it in Uganda. We're getting it in Tanzania. Fingers still crossed from Kenya in my lifetime. And we've seen it in South Africa. We've seen it in the Middle East. So I think last year was just game changer for regulatory clarity. And I see 2018 as being the same.
You just listed off a ton of countries, and all those regulations can be different. You're having different relationships. We have a Twitter question that came in from @CryptoInsurance. Should there/can there be an FDIC for global crypto to protect retail investors from coin collapse?
Well, this takes me back to the same point, which is like, if a consumer wants insurance on their investment, let them pay for it. Should it be a government institution that offers that? Do we have to have one-stop shop? The FDIC has to do it in one way, or maybe different companies can innovate and show a different way to provide insurance for their consumers if that's what the consumer wants.
So protection in the private market?
Yeah, definitely. I mean, the problem that I see is that, we had the Kenyan National Pension Scheme came out with a huge corruption scandal. So do you want to let them insure your future pension or not? And that happens in many places. And I think my reality is the last 10 years, we've seen some governments do it really well in some of our markets and some not. But there's not like a consistent level. And I say that from Europe to United States to Africa. Africa's not alone. And I think the last few years post-Trump have showed that to be true, right? So, I mean, you never really know what the level is going to be. So, let the consumer decide.
How many currencies are you making a market in right now?
15.
Do you think that we will soon have fiat e-currencies?
I hope so. I mean, I completely agree with Peter Smith on this.
When is it coming? Who do you think is going to be first?
So there were a bunch of press releases about the BISAO, which is the Central Bank of West Africa, which was fake press releases. I don't know who put those out. That's not happening anytime soon. So there's going to be no ECFA anytime in the next few quarters, I think. We saw it for Tunisia press release. That's not happening. So I don't really think we're going to see an e-currency on the continent of Africa this year. Although it would be awesome. It would be easier for me to trade between fiat and digital if you had an e-currency. I do think in Asia we might see some movements, definitely from the PBOCs making a lot of noise about that. Again, I'm not a fortune teller, but I think that would be awesome. I'd love to see an ERMB. I'd love to trade and make currency pairs between African currencies and an ERMB. It would make it a lot easier for me to do so. Mobile money made it easier to trade the Kenyan shilling. So whether it's pegged to a government-issued currency or not, whatever, for me, it's just the ease of the friction of transacting in it.
What do you think that means, though, for all the smaller currencies that are out there? I mean, talking to you before, I know you actually like all these little quirky currencies around the world. Do you think those disappear?
No, not at all. I see it as complementary because, I mean, I don't think you can have monetary cohesion or like one monetary union without political, social, cultural union, right? In East Africa, we have the East African community. We still don't have any sort of cohesive infrastructure to go between the two, the three countries of Uganda, Tanzania, or Kenya. And I mean, the problem there we've seen is that you have the idea, you have the will in some aspects, but not all. And I think with monetary policy, it's the same thing. There's over 55 currencies in Africa. How are we going to have one monetary policy when Europe can't even do it? Where's the Southeast Asian monetary policy? We still have a long way to go. So what I see in the short to midterm is a world where you have many currencies, but their friction for transacting between them is reduced. And hopefully secondary brokers like Bitpesa or Unacoin or CoinsPH or the larger exchanges are the ones helping consumers purchase and make pairs between those currencies. And then you have corporate currencies as well, like Amazon points or Alipay points. So I just think it's an exciting world where we're not going to talk about whether or not a central bank should issue an e-currency. It's just going to be all currencies are e-currencies.
You get paid in Bitcoin, is that right?
Yeah, we offer it to all of our employees.
And would you say that you are a cryptocurrency investor?
I mean, I guess. I mean, I definitely hold crypto, and I think it's an important part of understanding how this ecosystem works, and the different wallets you use, the different ways you can transact, the different products you can purchase. I love Expedia's acceptance of Bitcoin. I book hotels with Bitcoin all the time. I don't think that there's going to be a future where everybody pays for every Starbucks with their digital gold. You know, maybe the EUSD.
We're always using the Starbucks example.
Yeah, but I mean, there's definitely things that make it way easier for me to do that.
Elizabeth, thank you so much for coming to New York and sitting down and talking with us.
Thanks for having me.
Now taking the stage, please welcome CoinDesk's Bailey Reitzel with Alex Centerborg, founding partner at Tetris Capital.
Let's switch the sound, Fritz.
Hey everyone, how's it going? Last session. Glad you guys stayed for all of it. As mentioned, I'm Bailey Reitzel. I'm the U.S. editor of CoinDesk. I've been full-time with them since August. And here on my left is Alex Sonnenberg, the founding partner at Tetris Capital. So what I wanted to start with is just you sort of explaining your move to Tetris Capital and where you came from in the industry.
Sure. So I got my career started in finance. My first job was in investment banking. In late 2014, I left with two friends from college that were both software engineers to co-found a company called Lawnmower.io. It was a mobile app for investing and researching into cryptocurrencies. The first iteration actually took a model from the equities world, so we modeled it after Acorns, which is a popular stock trading app that allows you to convert your spare change by linking a credit or debit card up to the app, it tracking your purchases and automatically rounding up each purchase and buying equities. We use that sort of method for buying cryptocurrencies as a way for people to passively dollar cost average into Bitcoin. This was at the end of an 18-month downturn when people were pretty cautious about the price, how much to buy, when, so we wanted to make this really easy passive way to do it. We also added research by linking white papers, linking CoinDesk articles. We wanted to make this kind of more comprehensive investment platform that blended news, research, and investment tools. We ended up selling the app Lawnmower to CoinDesk in January of this year. So from January to August, I worked as a research analyst next to Bailey and the rest of the CoinDesk staff, mostly covering public cryptocurrencies with a heavy focus on data analysis. I co-authored a lot of the state of blockchain reports that you saw earlier this morning. In about August of this year, I left CoinDesk to co-found a company called Tetris Capital. Tetris is a hedge fund that invests in crypto assets. We invest across the crypto asset class. By that I mean we invest in both already large liquid assets like Bitcoin all the way down to pre-ICO SAF deals. So we really try and analyze this opportunity across the space and kind of actively manage our portfolio to where we view the best risk reward at any given time to be.
Right on. Yeah, and you sort of mentioned some of the cryptocurrency tokens that are out there. So I sort of wanted to start by going through some of that for the people who are more new to this space. So you can jump in at any moment, but we have the cryptocurrencies like Bitcoin and Litecoin. They typically have their own blockchain. And then we also have the crypto tokens, is what we at CoinDesk like to call it. Those are crypto tokens generally created through the initial coin offering process. So created to raise money to build a future platform. Those are sometimes created on blockchains that are already existent, such as Ethereum or Stellar, but sometimes they also have their own blockchains as well. And then there's like a whole plethora of words that are used to describe ICOs or ITOs, initial token offerings. It goes on and on. Everybody's just creating new words right and left. Did I miss anything?
Yeah, well, That was pretty accurate. The way I like to describe it is generally this class of cryptocurrencies. That's kind of the original use case. You know, it's trying to be money, store of value, and a medium of exchange. Obviously, Bitcoin started us off there. As you said, we have stuff like Litecoin that, you know, tweaked things like the confirmation times, or that may have lower fees due to being used less right now. There's also a wave that's very related or within that bucket, which is these privacy-focused cryptocurrencies, things like Monero and Zcash, where basically the idea is to mask the receiving and sending address as well as the amount sent, to kind of bring more anonymity. And even in a business-to-business context, there's a lot of situations where people just don't want their transaction history to be public to anyone who can view it. Moving to the sort of second category, I like to divide it between actual decentralized application platforms. So these are kind of sort of the infrastructural tools, or the layer, mostly marketed or designed for developers to actually create the end user applications that sit one level up, which we often call dApps. Now, these are actual end user facing applications as opposed to the more tools one layer down that are for developers. These actually face users. These allow you to access new marketplaces. So a lot of these decentralized applications are both trying to attack traditional companies, so create things like a decentralized version of Facebook or Uber or Twitter, as well as there's a whole class of decentralized applications that are sort of using this technology to bring about brand new kind of business models. One example of a certain type of decentralized application would be a decentralized exchange, so a way to trade tokens peer-to-peer without the use of a central party like a broker or an exchange. So generally we have our cryptocurrencies, our dApp platforms, our actual dApps, and then there's this whole other category that's a bit more vague, but I like to think of it as basically asset-backed or cash flow-backed. So in this bucket I put things like stable coins, which are backed by dollars. There's also tokens that are sort of backed by gold, using sort of the token infrastructure to be transacted more efficiently and use some of the sort of accountability of a public ledger. And there's also assets that sort of derive their value from basically future cash flows. So a good example here would be an application that by holding the native token, you are entitled to a % of all transaction or trading fees that happen on the network. So there's obviously a huge universe. 10 years ago or less than that, there was only one. Now there's thousands. Some of them have their own blockchains. Some of them are tokens on top of existing blockchains. They're all secured in different ways, whether it be proof of work, proof of stake. Some were created via ICOs. Some were created via mining. There's differences in terms of what the circulating supply is to the public, with institutional investors, with the actual team, how they're vesting or locked up, and so on. Basically, this is a very diverse asset class.
Yeah, did you guys get all that? That was so much, but that is like how diverse the space is, as you said. There's just so many new methods for creating tokens, and it gets quite hectic, as I'm sure you all just heard. So moving on, you had mentioned in the rehearsal call that this space was crazy, and as we just proved, it is very crazy. But that leads me to, how are people supposed to differentiate this if they're not quite as technical as like knowing these different tokens? For somebody who might want to invest in the currencies, how would they differentiate? Like, what's a good indicator of like a good quote unquote cryptocurrency?
Yeah, there's a lot of things you can understand even without being that technical. So a really easy question is, a lot of you are probably familiar with the website CoinMarketCap, which aggregates cryptocurrencies and sort of lays them all out ranked by market cap. One thing to be aware of is market cap's obviously calculated by price times the supply. Now here again goes to my what I just brought up, but the supply is not consistent across all these tokens. It's kind of like equities. You can't just look at a what's the overall supply look like? What's it look like today versus a few years from now? A good example is Zcash has a similar supply curve as Bitcoin, approaching 21 million. Bitcoin right now is maybe at 17 million mined. Zcash is at 2 or 3. So it's really a good idea to be aware of, here's the same sort of supply schedule, but these currencies were created at different times. You can look at something like how many this is maybe a kind of shallow metric, although directly related to usage or interest at least. How many people have contributed to the project's GitHub? How many people follow this project on Twitter? How many times has this wallet been downloaded? How many people are on the Reddit? A good thing to be aware of is also, if you're considering buying something, where are you going to buy it from? Do you really have so really, where are you going to hold this asset? What are your current custody solutions right now, and what may be there in the future? So basically, there's a whole lot of catalysts. You want to know what's going on their roadmap. How are they treating things like scaling? How many transactions a day happen on these platforms? In the case of these decentralized applications, is there actually even an application live, or is this right now a token for a product that's yet to be released? And when does the team think it'll be released? So without diving into the code, which is obviously a major part, there's a lot of things you can do. Most people aren't experts at every company in the S&P 500, but there's fundamental analysts that do analysis on their operations all the time.
Right. Yeah, that's a good point. Yeah, so I guess if you could tell us some of the stuff that Tetris invests in, sometimes it's helpful to get an expert to sort of talk about that. And maybe if you can't give us specifics, like what are some of the areas you're looking at? I know you had mentioned decentralized applications, so.
Yeah, so at Tetris, like I said, we kind of invest across the asset class. So one thing I would say we are very focused on is maintaining a good level of overall portfolio liquidity. So how we do that is we generally restrict our overall portfolio allocation to illiquid assets, which are generally in the form of these SAF deals, to less than a quarter of our portfolio. One thing we also really keep in mind when we're looking at these SAFs or any sort of ICO deal is really the opportunity cost until you are actually, you think you'll get liquidity. What I mean by that is it's common now in the institutional investment area for these projects to sort of approach institutional investors far in advance of a future ICO to basically get the money to develop the protocol or application and hire out a team before they're actually ready to push a project live. This structure originated from the equity world where safes are a common investment vehicle before something like a Series A round. So generally what I look at when I'm looking at a SAFT is how long will it be until this ICO? Given the uncertainty of the market right now, what are the chances this ICO actually even happens? The structure completely changes, the deal gets pushed back. What sort of vesting will I have in my tokens after the ICO? So sometimes it's common for example, issuers to give you a discount to a future ICO, but in exchange for that, you need to lock up your tokens for, say, a year after the ICO round. So my big analysis is really, what do I think Bitcoin or any other core asset in our portfolio we could invest in? How do I think that would do in relation to this large illiquidity period that I'll likely have given one of these SAF deals?
Well, yeah, and so you mentioned that you like sort of the liquidity plays. So what I hear quite a bit from hedge funds, some of these new hedge funds that are in the space, is they're looking for longer term plays, so like between 3 and 5 years. So they want to see the token lockups, they want to see a vesting period, an employee vesting period. But you had mentioned to me, like, you like that fast pace and the liquidity of some of these.
Absolutely, yeah, I think one of the huge attractions of investing in the crypto asset space is the liquidity. So I often describe our hedge fund as sort of a blend of a hedge fund and a VC firm. So we make a lot of these early stage investments before there is a product, before there is real traction. Sometimes there's not even existing investors in the round. One of the really attractive things is in a VC world, if you make a seed or Series A investment, you're generally then just kind of waiting on this illiquid asset until a future IPO or some sort of liquidity event. The only way you mark your portfolio or think you made profit in the meantime is when another raise happens at a higher valuation, at which point you can kind of mark it on your books as being worth more, but you really have no liquidity. So for us, if we're going to make a sizable investment, say 5% of our portfolio into a SAFT, we're given liquidity in, say, 3 to 6 months. And, in recent times, it's not that crazy to have something go maybe 10x plus. I'm very much of the mindset that if there is a liquid market, aka it's trading on exchanges, and we can get liquidity without slipping the price, I have no issue taking our cost out, or if we even think it's a little overvalued. I have absolutely no issue in rebalancing a bunch of that back into our core positions or taking some profits. So I really think the sort of passive, very long-term horizon. Like, I'm long-term confident in a lot of projects, but that doesn't mean that I'm not going to rebalance back to what I think is the most, has the highest risk return or opportunity in the short term. So
what are you rebalancing into there?
So oftentimes, like in the recent weeks or months, it's simply call it long tail assets or these newly liquid ICOs back to something like Bitcoin or an asset we're more fundamentally comfortable with. Also, to your other point, what I was sort of assets I like or characteristics of it. One thing we like to mention a lot, which you hear a lot of people talk about, is just the general concept of velocity in a token, which is really relevant in a lot of DApp conversations. So let's take an example of a gambling DApp, one that you need a token in order to place bets or access this gambling marketplace. The nature of the token in that situation is kind of like, if I'm on the sideline and I have my existing cryptocurrency holdings and I want to use this application, I'm likely going to go acquire these tokens. I'm going to use them in the gambling ecosystem for as long as I like. And at that point, when I'm done gambling, I'm probably going to sell them all. It really doesn't make sense for me to keep my gambling tokens over time until the next time I go. I don't know a lot of people that keep casino chips rather than cash them out at the end of the day. So this kind of high velocity or high turnover from hand to hand really makes it so that there's always like a high degree of float in the market. People are always looking to sell. This is kind of in contrast to something like a store of value asset, where really what people want to do is hold on to it and not transact a lot. And actually, in the case of Bitcoin's recent run-up, a lot of people were talking negatively that Bitcoin had high transaction fees. It's actually positive from one regard. I mean, there's a lot of demand to use the network. It actually meant a lot of people didn't then want to go move it or sell it, which really helped as there's a low scarcity available on the market to drive the price up.
Yeah, I mean, for a store of value, that would make sense to want people to hold. We don't have a whole lot of time, but I did want to get into the CFTC and SEC hearing. I assume that some of these hedge fund strategies keeps in mind that the regulatory environment could shift quite dramatically. Based on what you heard yesterday, what are your thoughts there?
So things I'm scared of is generally entering into SAF deals, which then have these planned ICOs that don't happen, or they get pushed.
So SAF deals, did we explain that?
Simple agreement for future tokens. Okay. So it's something that turns into tokens at a later token creation or issuance date. So generally the big fear is there you invest into a SAFT, which will give you a discount or an allocation into an ICO in the future, and then given this uncertain regulatory climate, the project decides that they can't do a public offering, so your liquidity is just completely messed with. Also, I would say on a very similar note, it also would make me cautious to hold a lot of assets that have ICO'd previously due to either enforcement being taken on them after the fact, or a real big fear is the actual asset being delisted from an exchange, which would totally crater the price as well as the liquidity or thought of ever exiting that position. So it generally makes me hesitant and makes me want to harp a lot more on these teams and their legal teams about their strategy to distribute these tokens, or how they're viewing their future ICO, or what steps need to come in line, or how they don't think they're security, but generally around ICO assets, of course.
Yeah, it's really interesting because either the CFTC or SEC commissioner said he had not seen a token that was not a security, that he did not deem as a security. So I think that makes probably people quite hesitant.
One thing I think is really interesting on that note is the SEC did say he didn't think he'd ever seen an ICO that was not a security. The one thing that seems inconsistent, or at least interesting from my perspective, is in the DAO token report, all of, a year and a half ago the DAO happened now? In the report, it clearly describes the DAO token as being a security. However, throughout the report, it mentions that investors were funding these DAO token purchases with Ether, which they call a virtual currency, make absolutely no mention of Ether potentially being a security, or the fact that it too did an ICO. So that just made me generally curious of how the SEC is viewing Ether, which is an asset traded on the largest exchanges like Coinbase, which I think would dramatically kick off a downturn if something like that was considered to be a security and delisted from these major exchanges. So.
Yeah, absolutely. Well, that's really all the time we have. Sorry that was quick, but thank you guys very much for sticking around, and thank Alex again. Thank you.
Ladies and gentlemen, Andy Serwer.
All right. That's the thing. All right. Well, this concludes the Yahoo Finance All Market Summit Crypto. What an awesome day. I learned a lot. I laughed. I cried. I could see it out of the snow. I got a whole lot wealthier. We got that heat map. Throw it up. It's been a good day for crypto today. Look at that. A lot of green. And so please make sure to bookmark the page. We really enjoyed working with everyone here. I hope you guys learned a lot. Thank you so much to everyone here in the live audience. Thank you to everyone out there watching all around the world. And thanks most of all to everyone here and the team and the crew who put this together. It was a really great day. Thank you very much, and we'll see you out here again soon.
Alrighty, welcome to everybody watching the All Market Summit, the crypto edition of that. Well, today in the stock market, we had stocks up, stocks down, back up, and then as we head to the close, looks like we're going down again as we have the fourth straight day of wild trading on Wall Street. This is the final round. I'm Miles Upland here in New York. We have another wild day of trading on Wall Street. We come into the close here. The Dow was the only major average in the green. About 5 minutes ago, we were up triple digits, so we'll see where we settle, and we will have more of the market action coming up. Plus, big earnings today after the bell from Tesla and 21st Century Fox. We'll have them live in just a few minutes. And a big day for crypto and digital currencies. We'll explore if prices have finally found a bottom. Plus, look at everything you need to know about tomorrow, today. But first, let's go over to Yahoo Finance's Dion Rabowen to talk about today's market action. Dion, what's going on? What's going on? I mean, when we came down to get makeup, it was maybe Dow up 200 or so points. Earlier today, we were up triple digits. We opened the day, of course, deep in the red before another bounce back. What do you make of what's going on in stocks right now?
You know, I think what's going on is a bit of a tug of war between the fundamentals and the BTFD fundamentals, which is traders out here buying these dips. And so I think we're seeing these wild swings with the algos and the traders. You know, everyone's trying to get in a good deal, but we've also got market fundamentals kind of headed in a down direction. And so that's pushing and pulling the markets. And you've also got a lot of these investments in volatility that are washing out. A lot of the short vol investments, the CBOE trades that we saw crash and burn at the beginning of this week, those are still getting kind of pushed and pulled out of the market. We've also got the treasury market rising back up, touching or getting close to those highs that it set earlier this week. And I think that, again, is having a significant impact on
it's kind of this push and pull between, do you trade on the news? Do you trade on fundamentals? Do you just trade on the recent price action? Because I think there's clearly some sort of search for direction. I'm not really sure how long it takes for this to resolve, but obviously yesterday was sort of not the end of that period that we saw, begin late last week. You touched on it a little bit. I want to talk about what was happening in DC today. We have ongoing budget deal negotiations. We heard some news out of the Senate. There's a 2-year plan there. Now, we're not sure if that thing will pass in the House. Dion, break down exactly what's going on. Once again, I suppose we're talking about budgets, a shutdown. Where do we stand on all of that?
Yeah, well, the idea being considered right now in the Senate is a $300 billion deal. It would extend the spending, or the spending cap. It would extend also the budget deficit and the debt ceiling. All those things pushed out for 2 years. The things that we've been kind of squabbling about, and we hit every 3-4 months it seems, and that almost shuts down the market. So putting those aside for 2 years, we'll get this 2-year spending bill that's going to actually keep the lights on in DC. That's a good thing. You've got the childhood insurance program, which is going to be funded
CHIP program,
exactly, for 10 years. You've got $20 billion in infrastructure spending and about $131 billion in non-defense spending, the rest in defense spending. So big wins for Republicans and Democrats. The big question is are the actual bodies in Congress going to vote on this? This is a big increase in spending. I know some of the folks on the House Freedom Caucus might have a couple things to say about this. Some of the deficit hawks might have some things to say about this. And also Nancy Pelosi has said the Democrats in the House aren't going to support this if it doesn't come along with an agreement on the Dreamers, this immigration deal the Democrats have been working towards getting. So we're not there yet, but we do have an agreement, at least in principle.
Yeah, a lot of different things going on. We have Boeing, of course, leading the Dow today on that news. I think markets believe there might be some kind of a deal. Then, of course, there's headlines about Democratic leadership and crisis, and all of these sort of stories go on. But sticking a little bit in Washington, but let's talk, you mentioned it earlier, about Treasury yields. We saw the 10-year back at 285. I think I saw 285. You carried out to the next decimal, technically 286. That was really the story if you go back to markets 2-3 weeks ago. This, at that point, it was a stealth rise in yields, but now certainly this is the real deal. Is this the story again? Are we back to talking about Treasury yields, or are we still kind of fixated on, well, stocks are up, stocks are down, and that is really where investor action is at?
Yeah, it's amazing what we can talk about when stocks aren't hitting new all-time highs every single day. This was one thing that it depends on what you like to talk about, but one thing that we are now looking at is the possibility of an increase in inflation. And as we just talked about, the $300 billion deal for an increase in spending and federal spending, that doesn't come without some sort of consequences, as we see the closing bell happening. So when we see an increase in spending, that also means an increase in Treasury supply. It also means more bonds, which also, is going to push those bond prices lower, bond yields higher. That means an increase in borrowing costs. That means everything gets more expensive. That also means you've got a bigger hole in the deficit than we had before. And this is something that, bond watchers are looking at and saying, hey, wow, this might be something that really pushes inflation up, and we might need to get out ahead of this.
Yeah, it's something, again, most investors haven't dealt with really in multiple decades. But you noted as you were talking, we did have the close of trading on Wall Street. It looks like all of the three major averages closing in the red. The Dow, the smallest loser there, down about 19 points. We'll take a check on the markets when we get a final settlement of where prices were. But speaking of the stock market, just like clockwork this morning, President Trump waded into one of his favorite Twitter topics today, tweeting, in the old days, when good news was reported, the stock market would go up. Today, when good news is reported, the stock market goes down. Big mistake. And we have so much great news about the economy. Dion, would you compare this to the famous call that we had from former President Obama to buy stocks? Or is this merely Trump, I don't know, tweeting because that's sort of what he does?
Because that's what Trump does.
Yeah.
I think there was certainly a little bit of that. I think, everyone on Twitter was egging him on like, hey, Trump, well, now you're not talking about the stock market. And if there's one thing President Trump loves to do, he loves to give a little backhand to his haters. So they were all saying he wasn't going to say anything. He was like, oh, yeah, well, check this out. I got something to say. I think it was a bit more of that. What is interesting, though, and what a lot of people have pointed out on Twitter, is that Trump might be talking about the extreme influence right now that central banks are having on markets, which is that we're seeing an extraordinary, markets are looking more toward what the Fed is going to do and how the Fed reads data rather than what data says about the economy. And so maybe, just maybe, President Trump is going over all our heads, and he's really making a comment about central bank monetary policy.
To that point, when I saw the tweet, I saw it and I was like, he's kind of right. in a way. I think it's a very Trumpian comment in the sense that he gets at something that's extremely true, a visceral truth, if you will, but goes at it in sort of a, I don't know, he's capitalizing stock market. It's not really clear exactly what he's trying to say. He has a parenthetical in there that's sort of all over the place, but he's certainly speaking to a inverted logic of the stock market, which is that, good news is actually bad news, because when good things happen, that means another bad thing will happen in the future. And if you're not steeped in investing markets, you're not talking to investors, you're not thinking about financial markets, you're not assuming that worldview, it all kind of doesn't make sense.
Yeah, I mean, you see 200,000 jobs added, you see 2.9% average hourly earnings growth. You think, great, stocks are going up, and they tank. I remember we were doing a Facebook Live as this was happening, and as soon as the jobs report hit, we saw those Dow futures just drop, like they were going off a cliff. And, that doesn't really seem to add up, but it does if you understand that this could lead to higher rates, the central bank, the Fed raising interest rates, and U.S. inflation possibly going higher.
Interesting times, of course, always in the stock market. But let's go now to some breaking news we have out after the bell. We have earnings from 21st Century Fox out. Shauna Smith is here live with the numbers. Shauna, what do you got?
Hey there, Miles. Looks like a strong beat here by 21st Century Fox. Revenue coming in better than expected at $8.04 billion. The estimate was for $7.95 billion. Earnings per share also beating expectations. Adjusted was 42 cents. The estimate was for 38 cents, so beat by 4 cents there. They're also giving some commentary here on the recent Disney deal. Now we know Fox sold most of its assets to Disney for $52.4 billion back in December. Now they're saying that they expect that deal to close within the next 12 to 18 months since December. And again, we are taking a look at the stock here. Let's see where it is trading right now. We have it relatively flat in after hours here. But again, it was a beat on the top and bottom line.
Right, Shauna, thank you for that. Of course, always more exciting when the stock goes up or down after hours, but we'll have to live with no percent move there. We'll be back to you in just a little bit. All right, so let's talk about cryptocurrencies. Most of them up today as we had the Yahoo Finance All Market Summit dedicated solely to that edition concluding. Dion, let's talk a little bit about prices. Why the rebound today? I mean, I think the last couple days we've seen a real huge bid. I mean, I know Bitcoin is probably the one that at least I track the most. I can remember when it was 6,300 not too long ago. Now we're back above 8,000. What do you think is happening here in the crypto space?
Bitcoin definitely generates the most headlines, because it's the big one. It's the one that shot up and, created the cryptocurrency billionaires as they're dubbed. What's interesting about it is it looks like there might actually be a bit of correlation
I was thinking that
between the cryptocurrencies and the overall market. I was having a conversation with an investor I know, and he was talking about, it was really interesting how Bitcoin has seemed to silo itself off from the overall market, as in when it tanked from nearly 20,000 to 7,000, stocks really didn't sell off. And this, I think, was a couple days before we did see that massive sell-off. And so maybe we're starting to see cryptocurrencies ingratiated a bit more into the overall global economy, or at least the equity markets and the treasury bond markets, more so than we've seen in the past.
Yeah, I mean, I think obviously it takes a long time for a true correlation, a mathematical correlation among any asset to play out. You can't just do it on one day. But there was certainly a uniform turnaround, I think, in the price of cryptocurrencies yesterday afternoon as we saw the price of stocks go higher. And I don't know if this is a sentiment thing. I think you and I certainly know that there are many people posted at their trading station inside of Wall Street firms who are also looking at crypto right alongside the stock market. So I think it was just interesting to find those things kind of moving, not in lockstep, but certainly in tandem. We'll see if they divorce again. But an interesting development, I think, over the last 24 hours.
Animal spirits might be hit.
Psychology, potential development here.
Yeah, and I think that's really important to highlight. It's very much a potential deal, and I think like a lot of people who are entering this crypto space, they're doing so with a lot of trepidation, a lot of, well, let's see where this goes. We want to do this, we want to do that. They want to get into this. They want to generate some headlines. They want to do something hot right here. And I think blockchain has a lot of impacts for people that could really be great, and I think a lot of people are on board with that. But really jumping all the way into the crypto space, I don't know about that.
Do you think it'll work?
I have no comment.
All righty. Well, all right. But first, let's take a look at some of the winners and losers today on Wall Street, not in the crypto space. Stocks in the red today include CBOE, as the exchange operator was hit by 2 downgrades, citing VIX trading risk. Sanofi, as the drug maker's profit was lower in the fourth quarter and its forecast missed the mark. And Chipotle, Investors were not paying extra for a block today as the Mexican fast casual chain's same-store sales fell short of estimates, and it sees customer visits declining further this year. Now, stocks in the green today include Wynn Resorts, as CEO and founder Steve Wynn is stepping down following sexual misconduct allegations. Riot Blockchain shares higher as the blockchain tech name bought futures operator Logical Brokerage. And Snap. Shares were on fire for the Snapchat parent company as profit, revenue, and daily active users all top forecast that stock an incredible 47% gain today. Dion, any thoughts on the Snap rise today?
And I wish I bought some Snap stock back in the day.
Who among us?
I remember when everybody out there was poo-pooing all over Snap, you know? Now I bet they wish they were making that Snapchat money. I wish I was.
Yeah. All right. Well, quite a story there for Snap. Another hot stock that everybody is following, Tesla. They are out with quarterly results. Shauna Smith has those now. Shauna, any details?
We do here, Miles. So their loss per share was better than expected, coming in at $3.04. Revenue also a slight beat there at $3.29 billion. The estimate was for $3.28 billion. We're seeing the stock. It was lower here in after-hours trading, but it is reversing. Right now, it looks like we are trading higher, up nearly 1% here in after hours. They did give some color here on deliveries. They said that they expect to deliver 100,000 Model S and Model X vehicles in 2018. They also reaffirmed their target for the second quarter for their Model 3. Now, we know that the Model 3 has had pretty severe production troubles here. They have been way behind the ball on their initial targets. They were initially trying to produce or deliver 5,000 vehicles per week, 5,000 Model 3 vehicles per week by the end of 2017. That clearly missed the mark there. In the fourth quarter, they delivered only 1,550. But they are saying though that they are on track to reach the 5,000 now by the end of the second quarter here, so by the end of June. But again, we are seeing the stock. Looks like Wall Street is reacting pretty positively to these results here. It's up about 1%.
Yeah, well, I guess they could just, I don't put the Model 3 into space or something, and then maybe it'll work.
Send it to Mars.
They need to do something.
Yeah. All right, Shauna, thanks so much for that.
Thank you.
All right. Now, another thing that Trump doesn't want to hear about, and that's trade deficits. Now, the deficit ballooned 12% in the last year alone, and the trade deficit is poised to grow even more in the future as the president can thank his new tax cut plan for that. So, Dion, what are economists talking about when they talking about the trade deficit? Why are they predicting that it will increase in the year ahead?
Well, it's, tax cuts increase the rate of spending, which increases inflation. Inflation increases trade deficits. And this is especially worrying right now because right now we've got a weak dollar. The dollar's been weakening as stocks have been gaining, kind of this inverse correlation that's been going on since Trump has been president. And, generally when the dollar weakens, that makes American products sold overseas more competitive. American and multinational corporations are able to sell more products overseas, and they're able to reap more profits. That hasn't been happening even as the dollar's weaken. So we've got these sort of two phenomena that are usually correlated and going in the same direction, going in opposite directions, which is the weak dollar is going down and the trade deficit is going up. And those two things generally lead to economic surprises on the downside for the future of economic growth, because you need one of those in terms of your GDP, and that was Trump's big thing, is why aren't we growing as much as we need to? When we want growth, one of the main things we've got to do, and two main components, are the trade deficit and the dollar. And so right now, as these things are both weakening, economists are worried that as we, blow another $1.5 trillion hole in the deficit, add another $300 billion of spending with what we got today in the bipartisan deal, which if that goes through, that's a pretty big budget hole to make up for. And there are no plans right now to increase revenue with taxes or some other way, or to reduce spending. And so that's just going to, have people spending more money on foreign goods because they're cheaper. The inflation effect drives down the assumed or understood price of foreign goods while we're increasing the price of U.S. goods.
Yeah, and of course, the complicated thing here is that, financial accounting, right? Current accounts, deficits, things like that. They're all sort of weird accounting games. Things could actually be good in your economy, but if the value of the foreign goods coming into the country is in excess of what you're sending out, then you on net appear to be the loser, which brings us to the question of, do you think Trump this economically, or is this just a political talking point that he's been leaning into for so long that now he will at some point be forced to double down on it, even if the economy is doing quite well?
Well, that's a big question, right? Because he talked a lot about it on the campaign trail. He pointed out that we were losing to China. We've got these unfair deals with Mexico. He was going to label China a currency manipulator. He was going to rip up NAFTA. He hasn't done either of those things. And what he has done is, as we talked about, increased the budget debt, increased the deficit, and generally driven up what, at least right now, is expectations for inflation. And so I think at some point he's got to do something, because he talked so much about this. So much of his message was that's what's going to get people back to work, is when we get fairer trade deals with China, when we increase our current account balance and make that right. And I think it's hard to explain those things to the average American, but if the average person can see, hey, wait a second, things cost more now than they did before, I'm making the same or less, or, you know, my salary's not going up. What happened? And then they can see, oh wait, Trump didn't label China a currency manipulator. He didn't do anything about NAFTA, but he did cut taxes for, you know, billionaires and businesses and these multinational corporations, and that didn't trickle down to me. Wait a second, now I'm angry.
Yeah.
And I think that's a very visceral thing that he's got to kind of speak to at some point, or find something else, because, you know, he hasn't done anything on those fronts. And in fact, he's made them worse with some of his policies.
Yeah, and I'll be interested to see if this is another instance of we get inflation because the U.S. economy is doing well, and we also get inflation because the U.S. dollar goes down in value. But we have a more important story to talk about. This really was the biggest story of the day. From Michael Jackson and Bill Cosby to the Kennedy assassination, music icon Quincy Jones left no stone unturned in his tell-all interview with Vulture. Jones offered his theory on the Kennedy assassination, talked about his time spent playing music with Romano Mussolini, son of Italian dictator Benito, and discussed Marlon Brando's sex life. But the big shocker, Jones says that Microsoft co-founder Paul Allen, a big music fan and friend of Jones, actually plays the guitar as well as Jimi Hendrix.
As well as Jimi Hendrix.
Jimi Hendrix.
Yeah.
Do you buy this? What's your take on Paul Allen?
All right, guys, take care. We're done. We're good to go, guys. I hope you guys enjoyed the live stream. We're done. Let me know if you guys have any questions, guys. Comment below and let me know. All right.